TikTok family, I need y'all to hit that like button, that share button, tag Lolly Dolly everybody and let them know your boy Ramon Preston and the squad. We are live right here in the beautiful Buckhead community of Atlanta. All of you that are watching on TikTok, Facebook, Instagram, YouTube, LinkedIn, wherever you are, hit the like button, hit the share button, tag Lolly Dolly. I mean everybody. You need to let them know that your boy, Ramon Preston, my squad, we are all live right here in the beautiful Buckhead community of Atlanta. Today is Monday, March the 25th, 2024. And I'm telling y'all, I am just super excited about how this weekend just passed, how it went. This past Saturday, we hosted a live 4-hour deep dive on creative real estate investing. Here is the 37-page workbook made up of 4 sessions on creative real estate investing. And it was amazing. We had quite a few people in person here in our training room, and we had people who were live virtually, sitting in their virtual seats. And it was amazing. And if you were able to attend, I want to say thank you for trusting my team and I to give you information, to give you the game, to show you how to take your finances, your business, your investing to the next level. And today's show is going to be centered around creative real estate investing. So for all of y'all that are watching today, if you're into creative real estate, or if you're just thinking about becoming a real estate investor, please let me know by putting that information in the comments. Put your name. Let me know what city, by the way, you're watching us from. I would love to know what city you're watching us from. What city are you watching us from? Put the name of the city you're watching us from in the comments. Please put your name and the city you're watching us from in the comments. I would love to know what city you're watching us from. We are here in Buckhead, Atlanta. So I don't know what city you're watching us from, but let me know what city you're watching us from, and let me know, are you interested in real estate investing? If you are, put REI. Put REI in the comments. How about that? Make it real easy. Put REI. If you're interested in real estate investing, put REI in the comments. Let me know if you're interested in real estate investing. I want to give you some tips and tools that you can use if in fact you're interested in real estate investing. I am a real estate investor. I'm a business consultant, coach, educator. We have an entire educational platform called Ramon Preston University. Our signature program is called the Millionaire Blueprint, where we teach you how to engineer a $1 million enterprise. We also have a mentorship program. As a matter of fact, the workshop that we hosted this past Saturday was one of the complimentary workshops that we offer inside of our Millionaire Mentorship program. So if you're interested in being mentored, being educated on how to start, structure, and scale your holding company, your business entity, how to integrate the systems and processes for your entity, if you want to learn more about creative tax strategies and other financial strategies, as well as real estate, we teach all of this in our mentorship program and all the training courses we have that complement our mentorship. They're all inside of our Millionaire Blueprint, our signature educational program. So enough of the advertising. Let me get to what I want to talk about today. I want to talk about creative real estate investing. So for all of you that are interested in real estate and you want to invest, or you are investing, well, you should know, if you're investing already, you should know the difference between conventional real estate investing and creative real estate investing. If you don't know, one of the biggest differences in real estate investing, whether you're creative or conventional, is how you need and how you use cash, how you need and how you use credit, credentials, and other resources. So most of the conventional real estate investors, they need and use cash, credit, credentials, and other resources differently than a creative investor. As a creative real estate investor, yes, you need cash, but you don't need as much cash as a conventional real estate investor does. And sometimes you don't even need your own cash. You can actually purchase real estate with no cash or none of your own cash, okay? As a creative real estate investor, unlike a conventional real estate investor, you don't need credit or credentials. Like, this was a big eye-opener for a lot of people who attended our workshop this weekend, because they did not know that it was possible to purchase a home or any piece of real estate with no credit or credential. Well, when you're a creative real estate investor, you don't have to have a credit score. You ain't got to get your credit pulled. You don't need a FICO score, an Advantage 3.0 score. You don't have to give half your arm, or you don't need to show W-2s or 1099s or tax returns. That's the purpose of being a creative real estate investor, so that you don't have to have those things, okay? And you're still a legitimate real estate investor. So again, one of the fundamental differences between a conventional or traditional real estate investor and a creative or non-traditional real estate investor is how each one needs and how each one uses cash, credit, credentials, and other resources. And just this past Saturday, even when we were in the workshop, I asked everyone, when I started explaining these differences, I was asking everyone, based on the information you're getting concerning conventional real estate investors and creative real estate investors, which one do you want to be? And guess what? Almost everybody said, if not everybody in the room, everybody said, I want to be the creative person. Why? Because I want to be able to purchase a home with no credit. I want to be able to purchase a home with no credentials, right? And I want to be able to purchase a home with little to none, or maybe little to none of my own cash. So I'm not going to say it's no cash, but I'll say it could be little to none of your own cash, if that makes sense. And if that doesn't make sense, it just means that you need to learn other things about creative real estate investing, okay? So we talked about that, I think actually on the show, the live show, Friday at 12, I talked about those two differences, okay? One of the biggest takeaways that a lot of people got this past weekend from our workshop was the takeaway of the most important terms and concepts that you need to learn in order to become better at underwriting deals. So I want you to remember this when it comes to real estate investing across the board. Everything concerning real estate, everything is really tied to the deal, all right? If you do not have a deal, remember that. If you do not have a deal, you really ain't got nothing. Like, let me give you an example. You can have money, you can have an 850 credit score, you can have tax returns that blow any bank out of their mind, you can have resources like systems and processes and staff members and cold callers and everything, right? You can have all that. But if you got all that and you ain't got no deal, guess what? You really don't have nothing when it comes to real estate investing, because everything in real estate investing is tied to the actual deal. It's tied to the deal. So if you are able to find, or if you learn to find and identify with pieces of real estate that have problems that you can solve, and you're able to structure a deal around that piece of real estate that someone owns who may have problems that need to be solved. The fact that you have that deal structured, it will help you better determine what do you actually need to close this deal and to make money. Because that's going to have a lot to do to determine, do you need cash? Do you need credit? Do you need credentials? Do you need other resources? I don't know if I'm going to need cash or how much cash I'm going to need. I don't know if it's going to require credit. I don't know if it's going to require credentials or other resources. I don't know this until I actually find the deal. And what a lot of people who think about getting into real estate investing don't understand is, in order for you to actually find the deal, that doesn't mean you just driving around and you find a piece of property and you buy the property. That's not necessarily what I mean when I say you have to find the deal. What I mean is you have to identify with problems that are associated to a piece of real estate that are motivating people to have to sell that piece of real estate. And if you identify with those problems and you understand those problems as their motivations, and if you're able to develop or structure solutions to solve the problem, you're going to be able to structure a deal, close, and that's how you make money, which subsequently solves their problem. Now, if you just understood what I said, if you're tracking me this far, let me know in the comments that you understand what I mean when I say everything is centered around the deal. All right? Because you don't want to have this mindset that, oh, I can't get into real estate because I ain't got no money. That's not your problem. The money is not your problem. And I remember saying this last week, and I reminded everyone that was here Saturday about this. I remember saying to them and to someone else last week and Saturday that if you come across somebody who tells you they need to sell their property, right? Just hypothetically. And you ask them, how much do you want to sell your property for? And they say, oh, I want to sell it for $50,000. If you know how to underwrite the deal, that's what I'm going to be sharing with you today for a few minutes. I'm going to give you these terms and concepts so you can start doing some homework. If you know how to underwrite a deal and you did your underwriting on that property and found out that the property is worth $250,000 and they say they want $50,000. I'm just giving you an example. Let's just say hypothetically they told you, just give me 50 G's, you can have it. You underwrite it because you know how to underwrite the deal, and you find out that the property is worth $250,000. That means there's a difference of $200,000 in equity or potential equity in that property. Do you think not having money by yourself is going to be your problem? Do you think you're going to have a problem with money? Do you think not having credit is going to be your problem? Do you think not having tax returns and W-2s and pay stubs and bank statements is going to be your problem? Do you think having other resources like a line of credit or credit worthiness or trade lines, do you think that's going to be the problem? No. Why are these things not going to be a problem? Because the deal is going to demand money because you got at least $200,000 sitting there. Anybody will give you money to get that deal tied up, period. So that's why I always tell people, don't worry about the money and the credit and the credentials and the paperwork and all that stuff. That's why you want to be a creative real estate investor. The truth is, if you are an employee, if you are a 1099 contractor, if you are a business owner, shoot, I'm a preacher. If you are a preacher or a minister or a community servant, You should be creative. You need to take the word creative and use it as an adjective and attach it to everything you are, or attach it to the verbs of everything you do. Because the moment you tap into the creative side of anything, particularly in this case, real estate, it changes everything that you do. All right? So I hope y'all following me. And again, the most important thing when it comes to real estate investing, as I mentioned, is the deal. All right? And the only way you're going to get the deal is if you are able to find or identify with problems and see them as motivations. All right, for those of you that are watching me live, you are in a 12 o'clock noontime class. All right, so again, everything is about the deal. And the deal is not the piece of real estate necessarily. The deal is not what area of town the house is in. The deal is not that. The deal is finding and identifying the problems and seeing those problems as motivations. Because whoever owns this property, okay, I want you to see that. Whoever owns this property right here, you have to find and identify what are their problems that have created motivations for them to want to have to sell this piece of property. Again, and it might not be money. It might not be money. It could just be they have to move. Or it could be a 1,000 different reasons why they are motivated to sell this piece of property. Your job is to find the deal. And the way you find the deal is finding or identifying with problems and motivation that are motivations. Once you identify with what those motivations are, you have to, what we call, underwrite the deal. All right? And I did a lot of training on this just this past Saturday. And again, for those of you that didn't make the workshop, we have courses that we teach all this inside of our Millionaire Blueprint. We have a mentorship program that's why we had the workshop, because it was for our mentees, even though we did open it up a little bit for people who are not mentees. But I just want you to see just how powerful this one important point is that I'm sharing with you right now, okay? I just want you to see how powerful this one important point is. So again, if you're going to underwrite the deal, what exactly are you going to do? What are you going to do if you're going to underwrite the deal? Let me give you a more professional definition and description of what you're doing. Listen to this. Underwriting a deal describes the process of identifying the financial risk and quantifying those risks as acquisition costs. In the creative world, this is commonly referred to as the cost of entry. So I have to underwrite this property, this deal, because I have found or identified with the problems that the owner is having. I see them as their motivations for having to sell it. And now I've got to determine if, in fact, I can solve their problem by formulating a financial analysis or a financial profile of this property to see if, in fact, it's a good deal or not. Simple as that. And how am I going to do that? Here's how you're going to do it. Let me give you, and I share this a lot, but let me give you some, I'm gonna give you like the abbreviated version of how you're going to do it. You're going to do it by learning certain terms and concepts. And when you learn them, you have to get better at using them in terms of the calculations and the mathematical equations that you put together surrounding that piece of property. So when it comes to a residential property, whether it's a home, a condo, a townhome, whether it's a 2-unit duplex, 3-unit triplex, 4-unit fourplex, if it's anything up to 4 units, it is considered residential, okay? And that means you're going to have to conduct a CMA. This is a comparative market analysis. All right? So that means either you as the real estate investor, preferably you have a real estate agent or a professional who has access to the MLS who could help you determine what the comparative market value of this person's property is. So now I've identified that there are some problems with this person, and their problems have become their motivations to want to sell this property, okay? And so now what I have to do is determine if in fact I can solve this person's problem, and in solving their problem, this home, this property becomes mine. If I can effectively or successfully solve their problem. But the way I'm going to figure out if I can be the problem solver and it can make financial sense is I've got to underwrite this deal. So I've got to look at the financial profile of this property. I've got to look at the overall performance of this property. And I'm going to begin with what we call a CMA. I'm going to conduct a comparative market analysis, okay? Are y'all following me? So when I conduct this comparative market analysis, there are a few things I want to find out. Number one, I want to find out how much is the purchase price of this property? Like how much is it going to cost for me to buy this home? What is the price of it? Okay? I want to know the purchase price. PP, purchase price. Between the purchase price, we have equity, and I want to identify with what is the ARV or the after repair value of this property. So I'm slowing this down, but most real estate investors who know how to comp properties or underwrite these types of deals, they can do this in 2 or 3 minutes, maybe 5 per property. They can do it quick, all right? So I want to know the purchase price. I want to know what the after repair value of this property is, okay? So when I know the purchase price and the after repair value, it's going to give me an idea of what that raw equity spread is in the event I sold it. But then I'm going to break this down to determine if I sell the property, what that price is. If let's say I'm going to use the word rent to describe buy and hold, what that price is. Your CMA, if you conduct a thorough CMA, you will find out what the value of that property is if you rented it or if you did some form of a lease purchase. You would also find out what the value of that property is if you sold it, either the after repair value if you sold it or the as is value, okay? And then once I get that number, I'm able to now take a look at what my COA will be and what my COD. And it's so funny that I'm using these abbreviations because we only had a 4-hour workshop live this Saturday. And I promise y'all, I'm telling y'all, no lie, by the middle of the session, we did 2 sessions. We had 4. We did 2 sessions, then we took a lunch break. By the time we came back for the 3rd session, almost everybody in the room, they were using the abbreviations. They were asking questions like, well, if the CMA is this and the COA is that, how do I determine my ROI? What that was telling me was they started understanding these terms and concepts, and they were able to begin to do the math and the metrics and the equations on it. In other words, they were learning to underwrite deals. They were learning to comp properties, meaning that it's going to make it so easy for them when they start generating leads, asking the right questions, finding people's problems who have motivations to sell their properties, and they're going to be able to underwrite deals to determine how they can actually buy and make money. All right? Are y'all following me so far? If you have any questions about what I've covered, please put the questions in the comments. Let me know. Maybe you have some feedback or takeaway just based on what I'm saying to you. So I'm going to conduct a CMA. I want to know what the purchase price is, what the after repair value is, what would be my raw equity spread. I want to know what the rent value is. I want to know how much I could sell it for. And then I'm going to start breaking this down because I want to know what my cost of acquisition is. How much is it going to cost me to purchase that house? This is where you start getting creative. So I was using in my workshop real case studies of properties that we actually bought. I don't use hypothetical properties. I want to use real properties that I know we can show a settlement statement. We got receipts. We got paperwork. We got warranty deeds to show people this is how it works. And this is how you get to where you want to go in a deal. Okay? Now, you got to break this down because when you look at the rent, you got to go through the process of breaking this equation down. My gross rent, my operating expenses, my NOI, my debt service, my cash flow, my cash on cash return, or my ROI. So I want to look at that. When I'm selling it, I got to think about my COD or my cost of disposition. That means if I sell it for a certain number, I have to subtract commissions, closing costs, or other carrying costs that are built into my cost of acquisition. And then I've got to deduct the debt service that's attached to the purchase of the property if there's a debt service, whether it's owner finance, subject to, or a conventional loan from a bank. And then I want to see what the dollar amount is that I'm going to take home every year when I rent it. And I want to see the dollar amount that I'm going to make if I buy it, fix it, and sell it. And then I'm able to put that against or divide that into my cost of acquisition to see what is the return on my investment. Like, I share at least 12 different terms and concepts in my courses and in my workshops, because if you could just wrap your mind around these basic terms and concepts, you will be able to look at any property and do this type of underwriting, and you will probably get good enough to know within a couple minutes if that's a deal. And if I can make sense of this, now I can return back to Mr. and Mrs. Seller and say, here is what we can do. And if that solves their problem, guess what? We can get under contract, we can prepare for closing, we can get to closing, and we can acquire real estate. I'm going to stop right there, y'all. It's 12:30. I just wanted to come on today and at least, number one, remind you that if you want to invest in real estate, if you want to learn the ins and outs of real estate, if you want to become a master at real estate, but not in a way that is so complicated and complex that you never get it, then you definitely want to take the courses that we have available. We have about 3 or 4 different real estate investment courses teaching you the basics of real estate all the way into some of the more sophisticated creative strategies like owner financing subject to. And guess what? We also have other courses and other mentorship and training that we offer, because as real estate investors, there are other things that you have to complement your real estate investment acumen with, like having the right business structure. So I teach a lot about the holding company, making sure you have a holding company set up, that you have your enterprise structured correctly. We teach about systems and processes, making sure you have your systems and processes integrated right so your business runs efficiently. And we teach creative tax strategies so that you as an entrepreneur can be aware of ways that you can lower your tax liability while maximizing your profit. So for those of you that are watching the show and you are interested in learning more about creative real estate or anything that I just mentioned, creative real estate, holding companies, tax strategies, systems and processes, or all of the above, I want you to reach out to me today. All right? Reach out to me today. You can call or you can text the word mentor. You could call or text the word mentor to 678. Matter of fact, my team, they're probably watching live. Can you all put the number, the contact number in the comments so they can have it? 678, I know one of our numbers is 276. Well, both of them are 276. Is it 8556, 8253? I know one of them is 8253. And one of them is 8556, I believe. 678, 276. And one is 8253, and I think the other one is 8556. Am I right, y'all? Boom, boom, boom. I'm upstairs in my studio, so I'm yelling downstairs, hoping I'm right with my numbers. So you could text or call one of these numbers, 678-276-8253 or 8556. And one of our team members will answer any question you have about creative real estate investing. If you want to know more about our courses, our mentorship program, if you want to learn more about our community that we have a business community that you can join, and we can get you set up and started. I wish you could have made it to the workshop, because that was $1 million worth of game in and of itself. So I appreciate all of you for joining the show today. Please do me a favor, hit the like button, hit the share button, subscribe to my YouTube page, follow me on TikTok, on LinkedIn, on what else? Threads, X, Facebook, Instagram. Anywhere you go to on social media, you can find me at Ramon Preston, But we would love and appreciate you if you liked, shared, followed, and subscribed. We need your support. All right? Anybody have any questions, put your questions in the comments. We'll circle back around and answer any of your questions. Or just call and text the word mentor. Call or text the word mentor to 678-276-8253 or 8556. I hope today's show was a blessing to you, and I hope you learned something. I hope I gave you some game. Hey, I love y'all. Appreciate you all. We're praying for you to have a prosperous day and an even more prosperous week. Thank you for joining the show, and we'll see y'all next time. All right? Have an amazing day.